This is a very interesting week for the single currency, as there is a batch of important data coming out this week. For today's Targets in Focus, I am joined by Jacob Andreasen from ALM Brand Markets to discuss the euro-dollar, euro-Swedish krona and the Aussie against the US dollar. So Jacob, let's begin with the euro-dollar. Euro sentiment remains pretty subdued today. How do you think the euro-dollar will be performing after the release of the ECB rate decision?
Short term, we expect the upward trend to continue, but medium and long term, we see euro-dollar lower. Our 12-month forecast for euro-dollar is currently 115. What we have seen since the introduction of the Draghi put, euro has performed very well. This has been on the back of decreasing German CDS levels and increased risk appetite. So basically, risk appetite has been the primary driver of euro-dollar in the past couple of months. Our risk appetite index is still in a positive territory, but approaching an extreme level. And when we see a turnaround, we expect euro-dollar to follow southwards. Timing-wise, this could be when we approach the final report from the Troika about Greece at the end of the month. But meanwhile, the calendar is full of important events. One thing that strikes us is the low implied euro-dollar volatility compared to all these event risks. And one way of positioning for our forecast could therefore be to buy a put option, but with a knock-in slightly north of the current spot rate. I think the biggest risk to our forecast is probably an open-ended Q3 announcement from Fed later this month.
Now moving on to the euro stocky. The Swedish krona continued to depreciate against the euro yesterday after the manufacturing PMI index in the Nordic economy unexpectedly fell to 45.1 in August from 50.6. What is your outlook for this pair?
In terms of euro stocky, we see a risk for an upside correction in the near term, but on a 12-month horizon, we see euro stocky lower. The recent correction higher in euro stocky has been on the back of weaker soft data, and now both the National Institute of Economic Research and the Shadow Council suggest that the Riksbank cuts the policy rate with 50 points down to 1%. Since the last meeting in July in the Riksbank, hard data has surprised to the upside and soft data recently to the downside. Further, we have seen an appreciation of the stocky, larger than projected by the Riksbank. Recently, Deputy Governor Jansen also indicated that the growth path were to be revised upwards and that the current level of euro stocky were not hurting the industry. So our base case for tomorrow's Riksbank meeting is therefore an unchanged policy rate, but a lowering of the rate path going forward. If we look at the main reasons for why we see further upside risks, probably the most important one is that euro stocky is still trading a bit below our short-term fair value, but also market sentiment is still stretched, which is a contrarian indicator, and euro stocky is also technically oversold. If we look at the main reason why we still favor Swedish krona in the longer term, then globally we still see a structural increased demand for safe assets, but the supply is falling, and Sweden, with its AAA rating, are going to take advantages of this dynamics.
It is a very difficult time right now for the Aussie against the US dollar. Can you tell me more about the performance of this pair and your views on this?
Aussie is losing some ground again today, also relative to the other commodity currencies. In the medium to longer term, we see Aussie trading below the parity again. Our 12-month forecast is 96, but in the short term, we see flat trading in Aussie. The reason being it's still trending upwards and therefore support high yielders like Aussie, but on the other hand, Aussie is still overvalued in a short-term framework, and there's plenty of room for a downward correction. But in our view, Aussie is currently the least attractive currency in the commodity block. Medium term, recent Chinese growth bulletins and lack of policy response is probably going to weigh on Aussie through the low demand in the mining industry. And a hard landing in China could easily take Aussie down to 90. If one wants to trade Aussie from the short side but don't want to be exposed to global risk-taking, one could buy NOK instead of dollars, and then making the pair less risk-sensitive. If we look at the biggest risk to our forecast, it's probably that Aussie interest rates are going to increase again.
Thank you very much. Tomorrow I'll be back to look at the results of the ECB rate decision, so do tune in for that. Goodbye.